righty, man.
Welcome all to the Node. I am Mike, aka Veteran Crypto, and with me as always is David from DeFi University and also the Node. Today's show, we are going to dip into something that we always talk about, but we really have never dedicated a full show to it. And it's the importance of the utility and the tokenomics of these projects that we are investing in and hoping for profits, and the relationship between the tokenomics and the potential profitability. It's something that we say over and over again here on the show, that we are moving from a speculative market to a utility market. And David has rightly pointed out the fact that if a protocol or if a project doesn't have mechanisms in place to share the revenue and fees that it generates with token holders, ultimately you're holding a meme coin. There is no guarantee. There's no guarantee at all of profitability, but you have a much greater chance of profit if there is a mechanism in place where they are going to share that profit with you for holding that token. So that's, in a nutshell, what we're going to be talking about today. David, how's it going?
Where's my money, Mike?
Well,
if I'm holding the token and there's no money and it's not returning revenues to me, where's my money, man? Like if the protocol makes money,
it's being sold by the project probably to fund their operations,
right? Like what's going on here? Most of these protocol tokens and governance tokens, man, they seem to be just like straight up memes. Not actually with any utility at all. So I'm looking forward to talking to you about that. Do you have any specific tokens that you want to dump on first?
Let me introduce the socials, and then you know what? Let's be fair about it, and maybe ask AI to give them some parameters and say, hey, we're looking for projects that have a very high market cap, that the tokenomics are such that it doesn't transfer revenue or fees to token holders, and then maybe ask it in the opposite of which large cap projects do have tokenomics or mechanisms in place through buybacks and things like that, to where potentially some of that revenue and profits could make its way back to token holders. And let's just let the cards fall where they may.
Yeah, man, definitely. And I'm actually going to get
I have a couple that pop into mind. I know you do too.
Yeah, I've got a bunch, man. So, I'm just going to put together a little prompt here real quick. And as you're going through the socials, I'm going to get all of those criteria that we're going to start to judge these tokens on. I'm going to get that all ready. And then we can just use AI. And so that way, we're not going to be the ones doing any of the dumping. It's going to be the AI.
That's what I'm thinking, because we're going to zero in on probably the ones that we're always talking about, but we're going to be fair and equitable. Whatever.
No, none of that. We're going to be fair. We're going to be
fair. Equity, no.
All
right, so let's go ahead and pop on over to here. I'll add you. So, if you want to join the conversation that you see in the bottom right-hand corner, all of everybody in the chat here on YouTube, and you want to ask us questions or tell us we're full of shit, come on over here to YouTube, jump in the chat, and we're more than happy to. We love opposing viewpoints here on every one of our shows. If you don't agree with us, by all means, as long as your argument is fact-based and logical, we are more than happy to entertain it. If it's all just, you want to get all emotional and scream FUD, not interested. But if you can come at us with some data, with some information that shows that we're wrong, absolutely, we're more than happy to discuss it with you. So, by all means, come on over here to YouTube. Everything that pretty much everything that we do here is no charge to our viewers. Obviously, the YouTube channel you can watch. Our official website, a bunch of the educational information that's in DeFi University. Right now, our newsletter is no charge. There's a bunch of value in our community and across all of our channels that we are giving away for the most part, just because we genuinely want to help you be successful. We do have some premium services, one-on-one coaching, things like that we do charge for, but you can choose to do that. You don't have to. There's plenty of stuff that's no charge. So if you want to follow us at the node_channel, we appreciate it. It helps us grow and get good information out there. Really, it's all we ask is like, follow, and share. Help us grow this channel so that we can get this good information out to other people. Over here on X, let's go to profile. It's at the node channel, no underscore, if you want to follow us there. And our official website that David has been working tirelessly on, that is coming together nicely. Over here on the left, you can see before we went live, I posted links to all the news articles that I'm going to be referencing as we dive into the news. There's a link to DeFi University, that no cost education that I keep talking about. Go there, sign up. You don't have to put in a credit card, none of that stuff. Just start taking the courses and taking the quizzes. If you want to join the Discord and ask questions of David or myself or anybody else, in our community, we got DeFi Don in there. We got a bunch of people that have been students of David's in there. And feel free to ask questions. It doesn't cost anything there either. If you want to join David's live calls, he has 3 1-hour calls a day, Monday through Friday. And you're looking for a mentor that matches your investment style and your risk profile, then $97 a month, you can join those calls, every single one, every day if you want.
Mike, if you're looking for a mentor who's extremely good looking, this guy right here.
I'm not going to mentor you in DeFi, but if you're looking for a good looking dude,
then, there you go.
All right. So we got the news articles. We got DeFi University. As I mentioned, the private coaching. David has actually chosen one of our community members that's been with us forever, and she's in the chat right now, supporting the channel. We like to take care of the people that take care of us, free of of no charge. I can't use the F word. No charge to her. He's gonna live on his daily market wrap up at 4 p.m. Eastern, 1 p.m. Pacific, on Tuesdays and Thursdays. He's going to start showing exactly what he offers when he does this one-on-one coaching. So, going to put his money where his mouth is, and he's going to turn Ellie, who's in the chat, into a confident DeFi investor, taking her through the steps that he does with his other clients. He's had about 300 to 400 other clients, and if you go to the website, you'll be able to see video testimonials from many of them. So, just another something that we have. The AI newsletter. This is something I'm very excited about that me, David, and DeFi Don collaborated on. So I built the front end, and right now there's no cost. You can come to the site, you can sign up. We haven't put the payment gateway up yet. Come here. You can check it out. You choose the assets that you are interested in. Stocks, commodities, crypto, you choose. And you can generate your newsletter. And the newsletter is going to give you trading ranges. It's going to give you the hot news on those assets. It's going to give you liquidity pool ranges if you're looking for the lines of support and resistance, so that you can pick a good range on a concentrated liquidity pool. It's going to give you links to news articles. It's going to give you everything that you could want in a nice, summarized, you know, 10 to 15 minute with your morning coffee, or, if you pull it in the afternoon during your lunch, if you want to pull it, in the evenings, whenever it is, anywhere in the world that you want that information because you're about to do some investing or you just want to know what's going on, with your portfolio. It will save the assets that you are interested in, and you can swap them out and change them at any time. This is 100% automated and customized to your needs. I haven't seen anything out there like it.
Yeah, man, it's definitely, there is nothing out there like it. This is, I think, one of a kind, and I would expect that a lot of people are going to get a ton of value out of this.
Yeah. So this is our Discord, and all these links you can find on our official website, thenode.pro, or in the description on our YouTube channel. So you can find all this, and again, this costs nothing, but you can come in here and you can ask DeFi questions. Some of our favorite projects that that we're on is Arrow and Canton in our community, and so we kind of created some special rooms for those. If you have questions about DeFi pools or DeFi protocols, DeFi aggregators, if you want to share your portfolio and kind of ask for advice, or from other community members, because nobody here is a financial advisor, so we can just give you our opinion and kind of what we're doing. Airdrops, Jeff, he has our airdrop show. In fact, let me go through those real quick. Here's our upcoming live streams on our YouTube channel, but we have a whole network of channels here. So you're watching The Node, 2-hour show, Monday through Friday, 9 a.m. to 11 a.m. Pacific. We just got done with a great interview that David did with Shaw Fur over at Canton Network, one of the co-founders of Digital Assets. Very bullish on that project. Crypto and Chill, Tuesdays and Fridays, myself and Jeff. We just relax and talk about it's at the end of the day, 5 p.m. Pacific, 8 p.m. Eastern, and we just talk about what happened in the markets that day. Maybe have a drink, laugh, and joke. Blockchain Report. They're pre-records, but they're Monday, Wednesday, and Thursday at 11:30. And Jeff is really good at finding early projects that some of which have not had their token generation event yet. So he farms airdrops. So if you're into that, or you just want to get in early on potentially, a really good project, check those out. Don, immediately after this show, Monday through Friday, is DeFi High. So that is entry-level DeFi education. If you are potentially interested in getting involved, again, he is walking through the lessons that are in DeFi University. So, he's just kind of curating and, narrating, going through those. And he also talks about if you are an aspiring small business owner. He's a very successful business owner, self-made. And as we talk about often here, mentorship is huge. If you're looking to be successful at something, find somebody that has cracked the code, that has accomplished what you are trying to accomplish, and align yourself with it. Get them to teach you how they got there. They'll help you avoid a lot of the pitfalls and a lot of the mistakes that you would otherwise make and that they probably made. It's the best way to get from point A to point B, where you're at to where you want to get. Sovereign Soil. Myself and Drew starting tomorrow. Drew over at Blockchain Basement. We're both very much into self-sovereignty, emergency preparedness, homesteading, why we got into crypto and trying to remove ourselves from the banking system. We want to be self-sovereign. So me and him are going to be talking about all of that. Starting tomorrow, we'll probably start out with EDC, everyday carry, kind of little portable survival kit that you carry on yourself. Go bags and just things to take into consideration when you're planning your prep. As far as bug out, survive in place, all that stuff. Again, David's private coaching. He does the end of the day market wrap up and is going to be adding his live private coaching with Ellie. And we got on the weekends, Jeff. He loves to DJ. So he makes music on the weekends, Saturday Night Fever, 6 p.m. Pacific. Got the red pill that we had last night. And we just basically got drunk and talked about what's going on with our government and is it beyond repair. We just have very controversial topics that we talk about very bluntly, very honestly. Um, and again, we respect opposing views. We want to hear opposing voices. We don't want echo chambers. So if you're very left leaning, very right leaning, if you're in the middle, please join us. We would love to have a healthy adult debate on the topics that we discuss. And then finally, crypto and chill or gaming and chill is I almost said Jeff, Ellie and Jay. They randomly, usually on Sundays, but randomly throughout the week, they jump on and just play Arc Raiders or play Web3 games or whatever games that they're interested in at the time. And it's just a cool place to hang out, and kind of check out what's going on. So we got something for everybody here. And then, of course, we got the music that's coming up where David's working with one of our community members to come up with original AI generated music that's going to fill the time between the shows. So if you just want to watch the channel and have some background, music going while you're waiting for the next show, while you work or while you clean the house or whatever it is that that you're doing, working out, we got you covered. So, all right. I've been yammering on about the endless amount of stuff that we have available to people. Let's go ahead and jump on into the news. All right. So I'm going to quickly kick this over to you, David, so that you can take the helm for a minute, but I'll just burst out with the headline. Where do we want to start? So let's start with the macro. Geopolitics and energy volatility. So the OECD growth warning. The OECD has revised 2026 global growth projections down to 2.9% due to energy supply shocks and persistent inflation in G20 countries. What are you seeing on this topic, David?
Yeah, so here's the thing. What's going on in the Middle East right now is driving up oil prices. So energy prices are being driven up everywhere around the world. And the OECD here, as I'm reading about this, they did issue a warning today stating that the global economy is being tested and or derailed from its previous path of robust growth. So they're citing the primary cause being the escalating conflict in the Middle East. But when I'm going back down through their growth projections for as of today in March 2026, globally, the growth forecast is 2.9%. Now that's down from 3.3% in 2025. So just something to keep an eye on. Now in the United States, the growth forecast is 2%. They're saying that the AI investment is strong, but inflation is a major headwind. We haven't really seen inflation really begin to tick back up yet. But the thing that is bothering me a little bit here, Mike, about inflation expectations is what I see out of yields. So when I'm taking a look at yields and the dollar here, and I've actually got a little, something that I could just share real quick. If I just hop in and share my screen here, let me just go ahead and do this real quick. Let's take a look at this. So here's the yield on the 10-year US Treasury. Now, as this continues to push higher, what that is telling us is that market participants expect inflation to continue to creep up. Now, why in the world would market participants expect inflation to creep up? Well, because crude oil has been moving sharply higher. So, from just a couple of weeks ago at the end of February, crude was trading at $63. We're now nearly at $100 again. So, the increasing price of energy is driving inflation expectations up. And that requires that yields push higher, which should be negative for stocks as they're starting to break down here below their 200-day moving averages respectively. So if we just remove that horizontal, you can see that white line there, that's the 200-day. Nothing good ever happens below the 200-day moving average. This is the NASDAQ. So the bottom line for me, Mike, is that, hey, the OECD, they're saying that global growth is going to moderate to the downside, that globally it's going to be 2.9%, in the United States, 2%, in the euro area, 0.8%. And they're saying a sizable downgrade due to high energy dependence. Makes sense, right? If they import all of their energy and then all of a sudden they can't get any energy, neither from Russia nor from, the Strait of Hormuz.
Philippines,
Yeah,
perfect example.
yeah, so growth in Europe stagnating. In Japan, 0.9%. Again, stagnant as energy import costs are affecting, business investment in Japan. Um, so, yeah, this is likely going to be a bit of a double whammy with inflation and energy moving to the upside both at the same time. They're expecting a G20 inflation spike, which is inflation in the G20 is expected to hit 4% in 2026. That's a 1.2% increase over previous estimates. And they're expecting that, crude oil is going to continue to trade around $100 a barrel until we get some type of a de-escalation in the Middle East. And it seems as though that is unlikely to happen, Mike. Just reading the headlines, reading the tea leaves from earlier this morning, it seems as though that is pretty unlikely to happen. It looks as though Iran sent over another round of drones and missiles, and although there are fewer and fewer being sent, all of those producers in that region have been shut in. And the Strait of Hormuz, is still not really passable. The figures that I saw for shipping are that shipping basically, has moderated to zero through the Strait of Hormuz. So that must put upward pressure on crude oil, and that means higher inflation, lower growth. So, look, it's an opportunity right now to remove the largest state sponsor of terrorism globally. So that's what has to happen, but at the cost potentially of lower global growth in 2026. But we'll see what happens. Anyone who is putting out these dire warnings right now, it's probably a little bit premature, but we'll see. We'll see what happens. And
Right.
the OECD. So who is the OECD? Like what agency is that? Who funds them? It says that OECD stands for the Organization for Economic Cooperation and Development. And they're saying that this is like a club of the world's most advanced high-income democracies. It's headquartered in Paris.
There you
Oh,
go.
oh, great. Okay. So it must be good.
Mm-hmm.
So it
Yeah,
says here,
well,
check this out, Mike. The key partners are China, India, Brazil, Indonesia, and South Africa. Even though they aren't full members, those are key partners.
so a lot of those are part of those the BRICS countries.
Yeah, and it says OECD doesn't lend money like the World Bank, and it doesn't enforce laws like the WTO. And why in the world would the WTO ever be enforcing laws? But
Right?
so instead, it says it uses data and peer pressure. Ugh,
Peer pressure.
that's what it says, man. It says that the OECD is a standard setter. They create international rules that most countries follow, such
Mhm.
as the global minimum tax. Dude, the more that I'm reading about this, it's like, why are we even listening to the OECD?
Yeah.
Like this is like seems like a made up nonsense organization. You know how many people they've got on staff, dude? Can you guess? Can you guess how many people they've got on staff? I'll give you a hint. It's
Hit
great.
10,000.
3,500 people.
Oh, okay.
30, dude, that's a lot.
No,
3,500
it
people.
is
It's like,
for an
what?
organization that is basically just kind of making themselves in charge of something.
Yeah, and it says that for their funding, member countries pay dues based on the size of their dude. This is just ridiculousness. Member countries pay dues based on the size of their economy, and here in the United States, we are the largest contributor at nearly 20%. So, is this just another one of these globalist organizations that puts out nonsense research and has a bunch of highly paid people,
Mhm.
living in Paris, living off of dollars from American taxpayers? That's kind
Pretty
of
much.
what this looks like, man.
Yeah.
So, you know what? I'm just going to throw everything that they just said in the garbage.
Yeah.
And you know what? We should actually think that it's actually going to be the opposite, I think. So, if the OECD is saying that inflation expectations are going to push higher, we
Yeah.
should actually kind of expect that maybe inflation rolls over, and that's kind of what I think. This is a contrarian indicator.
Yeah. No, yeah, definitely. I mean, that's kind of why I don't listen to mainstream media, when it comes to, investing in finance and stuff, because it seems like that they always, they're just the mouthpiece, for, kind of the large institutions and just used to manipulate people, to make the wrong moves so that, they can, basically do the opposite and profit.
Yeah, man. They take advantage of that call to authority.
Yeah.
It's kind of like when you say, "Oh, that guy went to Harvard, so he
Hmm.
must know what he's talking about."
Yeah.
And for me now, whenever I hear that, I think, "Oh, went to Harvard, probably retarded." Like
Yeah.
that's what I
Oh,
think
yeah.
now,
No,
dude.
especially,
Yeah,
more recently.
exactly. So,
So, Um, let's dip into institutional buy the dip. Despite the price slump, institutional investors have poured 2.3 billion into Bitcoin ETFs over the last month, showing a divergence between price action and smart money accumulation. What are you seeing on this one?
man, so we can take a look at ETF inflows. Let me take a look over here at Farside. So Farside is, one of these research firms that publishes data on those Bitcoin, Ethereum, and Solana ETFs every day after the market close.
Can
And
you
so
zoom in a
all yeah, let me see if I can zoom in a
little
little
bit?
bit more here. So there we go.
Perfect.
I'm zoomed in all the way. It's, as if I can't see. So
My old eyes.
let me just get closer to the screen here. Maybe I can see
My
it.
old eyes.
Yeah, so I'm not really seeing that. What I'm seeing here is outflows. That's what I see.
Okay.
So what I see here, and Mike, you see this. So since let's just use since March 18th. So March 18th, that's let's call it 9 days ago, right? So since March 18th, take a look at the net flows. So when it's red and in parentheses, that is a net outflow. When it's black and not in parentheses, that is a net inflow. And so net over the last 9 days, it looks as though we've seen some pretty significant net outflows
Well,
from
what's
those.
the beginning? What's it look like from the beginning of the month, though? 'Cause
Oh yeah, let's take a look. So from the beginning of the month, you know what? So I've got data going back to March 9th. And so from the beginning of the month, it's actually doesn't look negative
okay,
because in the beginning of March, remember we had those moves to the upside out of Bitcoin, ETH, and
yeah,
other digital assets. So there were some inflows in the beginning of the month, in the first 2.5 weeks of the month.
mhm. but
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 you
but
know,
more recently, like you're pointing out,
yeah, more recently, though, we're seeing some outflows from those Bitcoin ETF products. Now, if we take a look at the Ethereum ETF products, let's just go ahead and take a look at this. Same thing, except that more red, more red.
mhm,
So, it's been exclusively outflows since the 18th of March for the
okay,
Ethereum ETF products. So just something to watch here. I'm not sure that this is a leading indicator. Um, I think that this is more of a lagging indicator because these data are printed at the end of each session. So, at the end of the day, each day, give it like a couple of hours and you'll get a reading here on the Bitcoin, Ethereum, Solana ETF flows.
mhm.
So, I don't think that this is something that we can look at as a leading indicator to tell you what price action is going to do next. I
It,
think that
it's
this is,
it's telling you after the fact. It's
yeah,
and just so people understand, it's kind of self-explanatory, but that's what he means by a leading indicator or a trailing indicator. Is a leading indicator would be something that's projecting that this is what's going to happen, whereas a lagging indicator, or I forget exactly how you said it, is like what this is, where you can see on the 27th of March there's no data yet because it's waiting for that data to be compiled. at the end of the day, the trading day, and then that data will pop in.
Yeah, yeah, so this is a lagging indicator.
Lag.
Um,
Okay.
yeah, so I like to focus on both of them, leading and lagging indicators. My goal is to get as many data points as possible. That's what I want.
Mhm.
Whether it's leading, lagging indicators, it doesn't matter. As many pieces of data as possible so that I can inform my decision making process with as much data as I can possibly get my hands on. That's that's always the goal.
I got my cat's wanting attention. I'm like, nope,
I know.
deny. I'm busy. So, all right. So, what we got up next is, of course, we still have the regulatory standoff going on with the Clarity Act. The U.S. Senate is currently stalled over disputes regarding stablecoin, creating a bottleneck for broader federal crypto legislation. I did see some rays of light this morning where they were talking about that they were making some headway. Um, there's still very, like we talked about yesterday or the day before, very divided. The crypto community and just the markets abroad, in large, are very divided because Coinbase is taking a stance, and I can see the point where why is it that Coinbase is able to hold up legislation? Who elected Brian Armstrong to the Senate? Congress, or at all, the House, the Senate, whatever. Um, it's something I complain about all the time. Special interest groups. Even if I agree with it, I don't necessarily feel like that they should be having that kind of influence over legislation. But that is what is holding this up. Is the banks, their special interest groups are trying to make sure that this legislation leans in their favor, and Coinbase is trying to make it lean in their favor. Coincidentally, Coinbase's way is also beneficial to us because it allows them to incentivize us to put our liquidity on their platform. So, we can earn 4 or 5% on our deposits as opposed to earning 0.07%, putting it in the bank. So it'll be interesting to see how this pans out. But let's talk about Tether. So we reported the other day that Tether was reported that they're going to be doing an audit. And the purpose behind this, just to refresh your memory, is that USDC and other compliant stable coins like World Liberty Fies and things like that, to be fully compliant, you have to have reserves of 1 to 1 for every stable coin in circulation. You have to have a US dollar or US dollar equivalent, and to be fully compliant, you need to be transparent about that. So you need to have audits and things like that. So Tether, not arguably, but they have the largest market cap in stable coins, as far as stable coins in circulation. They have been removed from a lot of jurisdictions like the UK and here in the US, things like that, because they don't have the transparency and that 1 to 1 backing. A lot of their holdings that in their reserves are things like gold, debt, private debt, things like that. So they have hired KPMG for its first full financial audit of the 184 billion USDT stablecoin, moving beyond simple attestations. So, what can you pull up on KPMG, David?
Yeah, so it looks like they hired KPMG to be the lead auditor. They're one of the big four,
Mhm.
firms in the United States. It looks like they also hired a quote unquote cleanup crew with price.
Well, are they like a hitman or something? What
Yeah,
are they doing?
that's what it looks like, man. So they're calling it a cleanup crew. Price Waterhouse Cooper, PwC. They're another one of the big four.
Okay.
They are going to be, cleaning up their internal reporting system so that they're actually cleaning up Tether's internal reporting system so they're actually ready for the KPMG audit.
Mm.
Um, okay, so I guess that this is a net positive. And now, why are they doing this right now? Well, it's because of the Genius Act. The Genius Act passed in July of last year. This new federal framework says that any stablecoin with over $50 billion in circulation must undergo an annual full financial audit to remain legally accessible to US institutional players. So without this audit,
Well,
Tether,
and
yeah,
keep in mind that the UK, is almost mirrored when it comes to stable coin regulation, and pretty much every other country in the world is going to align with the UK and the US because they're the largest markets. So that's why they're doing this. But sorry, go ahead, David.
yeah. So, what they're trying to do, I think, Mike, is avoid getting deplatformed from the US financial system. And so they're performing this audit. Now, here's the thing. As much as I'm for the transparency that would be delivered, as a result of an audit, right? I'm for that transparency. Um, these rules are arbitrary, right? They're just being made up as we go. And in crypto and DeFi, code is law. So, as much as I think that this is a net positive for there to be real transparency around what Tether is actually holding, um, you know, if you want to launch a stable coin in like Indonesia or something, you don't need to comply with any of these rules.
Hmm.
Code is law in this space. It's just that if you want to have legal access to US institutional players, then you must comply with these rules. So again, it's like, are we in the United States enabling innovation in this new industry, or are we stifling innovation by forcing these players to comply with arbitrary legal frameworks?
Hmm.
Now, I don't know. I don't know. Time will tell. But I think for right now, it's probably a good thing that Tether is auditing its reserves. They've got $193 billion in total assets, apparently, and also over $140 billion in US Treasury exposure. They're also a sovereign scale gold holder with over 140 tons of physical gold backing their reserves. They've got a 500 billion Tether has a $500 billion goal where they want to raise, a bunch more money to get their, valuation up to $500 billion. So the thing for Tether is that major institutional investors in the United States and in Europe have told Tether that they won't even look at a deal until that Big Four audit is signed, sealed, and delivered. So Tether is being, forced to come to heel in order to get legal access to the US and European markets. And, you know, compliance is a big deal for these really, really big players. But again, code is law in this space. So we'll see what happens. Yeah.
Well, all right. Next up, we got ICE, and that's not the immigration enforcement. ICE bets big on prediction markets. The New York Stock Exchange parent company, ICE, has invested an additional 600 million into Polymarket as monthly volume on prediction platforms tops 20 billion. What do you see in here, David?
Oh man. Well, so prediction markets are a big thing, and they're basically binary options markets. At least that's the way that Poly Market it looks to me. Like most of those markets are binary options markets. So you might actually be, trading a binary option when trade a prediction market without realizing it. So ICE has already invested in Polymarket,
Mhm.
and this $600 million is the final tranche of that investment agreement that ICE began with Polymarket in late 2025. So as of right now, ICE has poured $1.6 billion into 20 markets since October of 2025. And they're also going to, as part of this deal, ICE is going to buy back $40 million in additional shares from existing Polymarket stockholders. So that will bring Polymarket's valuation north of $9 billion.
Hmm.
So this isn't just about gambling revenue. It looks like ICE is after data, and the data on Polymarket is extremely valuable. Now, Polymarket's not the only player in the space, right? You've also got Kalshi, but Kalshi, is a different type of protocol, different type of platform. When you're trading in prediction markets on Polymarket, you're trading against other traders. But when you're on Kalshi, you're trading against the house. Now, Kalshi is bigger than, or at least their valuation is bigger than Polymarket. Kalshi right now, it looks like, is valued at $22 billion. Whereas after this last tranche from ICE into Polymarket, Polymarket is valued at roughly $9 billion. So Polymarket has the war chest now to compete for institutional liquidity, against Kalshi. So it'll be really interesting to see how this all pans out. Now, I did see that CNN partnered with Kalshi a couple of weeks ago.
Yeah.
I mean, look, man, when you've got to partner with a betting market in order to get more viewership for your news channel, it's probably not a good thing, you know?
Yeah.
So we'll see what happens there. But what does this mean for us, right? These event contracts on Polymarket, they're not a niche crypto hobby anymore. You're going to see these prediction markets and the data generated by them getting integrated directly into professional terminals like Bloomberg's terminal, or maybe into ICE's own data feeds alongside traditional stock and bond prices. So
Well,
that's a big deal.
they've already shown in a lot of ways that these prediction markets are a lot more accurate at at predicting potential outcomes, like elections and things like that. Traditional polls, because traditional polls, it really depends on where you take the poll. It's all about sample, the sample size, sample location, all of that. So with these prediction markets, people are willing to put money where their mouth is, instead of just saying, oh yeah, no, I'd vote for this person, or I think this is going to happen. They have to actually put money on the line. They're going to be a lot more honest, about, what they believe is, going to potentially happen. So it's very interesting. Like I'm not, necessarily not something I do personally. I'm not big into prediction markets, but it can't really be debated, very strongly that they aren't a great tool to predict potential outcomes.
Yeah, and so the thing about Polymarket and Kalshi is that when you put real money on the line, the data becomes much more valuable. So
Yeah,
what people say and what people actually do with their money, those can be two different things.
exactly.
And the all of those markets on Polymarket that allow you to express an opinion about an uncertain event in the future, those are basically options markets, extremely valuable data. And I can't wait to be able to pull a data feed from Polymarket through, maybe like TradingView or something like that.
Or
If
the
you're taking
Node.pro.
or the Node.pro, man, that'll be really cool too.
All right. So, morning, Jeff. What morning, brother? So all right, last one, and then let's get into our topic for today. So the last headline I got is DeFi capital outflow. So DeFi TVL on Ethereum has seen a sharp 2.8% decline in the past 24 hours, now sitting at 52.3 billion as capital rotates towards protocols with productive tokenomics. Remember that. This is a segue into our topic today. Productive tokenomics and fee generating models. What say you on this topic? Because this is a perfect segue into our topic for today.
Yeah, so I've actually got quite a bit of research that I was able to throw together just over the last 45 minutes here since we've started talking, Mike, on the top capital markets, top digital assets here. And what I wanted to do was figure out what is the real yield
Can you zoom
for
in bit?
Yeah, so you know what? I'm gonna zoom in here, and we can take a look down through this. So this
Perfect.
is just based on the Google Gemini deep research into real yield for the top 30 digital assets.
Mhm.
And Mike, what I'm actually doing with this right now is if I just go ahead, let me share this actually. Let me share this real quick so that we can take a look at this together.
All right,
Um,
so those people, really quick, those people that are just joining us, because we got about 31 people watching on Arena and about another 30 watching across the other platforms. If you just joined us, the topic for today is we are trying to focus in on projects that have actual utility. They have companies behind them that are generating fees and revenue and profits. And there are tokens for those projects. And they're part of the tokenomics, or the mechanisms in place are such that the fees and the revenue and things like that make their way to token holders. And it's very important that all of you out there understand this, because if there isn't, you are holding a meme coin. I don't care how profitable or how sexy the project is. If there isn't a way for you to share in the success of that project through directly, getting fees or revenue for holding the token, you are holding a meme coin. You're wearing the jersey of your favorite team. So that being said, David, please continue.
Yeah, yeah. So what I'm doing over here, Mike, is I put together a bunch of research here. So I don't know if you can really see this all that well. I'm just going to talk through it, and
Okay.
then in a couple of minutes here, maybe even faster than that, we're going to have a single page web app on Firebase that we're going to be able to go through together and talk through, hopefully, the real yield of the top 30 digital assets. So let me just walk you through what I did. I started off over in Gemini, and just a handful of prompts. And what you need is as much written analysis as possible.
Mhm.
So this was just one of the conversations that I had. Here's another one. Here's another one. And then this is my deep dive research into the tokenomics there. Here's another piece of context. And all I'm doing with this is I'm giving Cursor enough context to be able to build a really cool single page web app. And it looks like we should have this done any second now. It's just deploying to Firebase. And then we're going to be able to take a look at this single page web app and talk through the real yield of some of those top 30 digital assets here. And I think that we might actually be surprised to learn that some of them do have real yield mechanisms. So I called this meme or not. That is the name of this. And so I actually completed this just now, Mike. Let me go ahead and stop that screen share. And then I want to go ahead and share this app that I just built. So this is meme or not, real yield on the
It's
top.
like, it's like hot or not for crypto.
Exactly, man. That's exactly what this is. Real yield for leading digital assets. So check this out. This is pretty cool. So nominal staking APY. So if you're holding, most of the top 30 tokens, you can stake them. So you can stake them for some, nominal APY. Let's call it 6%, just as an example. So if you are holding a token and you can stake that token for 6%, but if that token is inflationary to the tune of 8% per year, well, you're actually losing 2% just by holding and staking. So you need more than just that advertised staking yield figure. You need issuance and burns, and you need to understand net inflation. That way you can figure out where the headline yield is, whether it actually survives after the supply dynamics. So let's take a look at this here. So here's a little bit, that's the equation, but here's the asset table. Check this out. And dude, Hyperliquid,
Not
Hyperliquid
surprised.
makes it to the very top of the list. You see
Not
that?
surprised.
That is so cool.
I'm going to reemphasize. I'm just waiting for that pullback that you've been talking about. I'm hoping that we get that pullback so that I can get some exposure to Hyperliquid.
Yeah, man. I mean, so according to these research that I put together, it says Hyperliquid has a nominal APY of 55%. So their inflation rate is, wow, Hype's inflation rate, it says, is 13%. The burn is 15%.
Okay.
Net inflation is minus 2%. Real yield, it says, is actually plus 57%. So on the real yield scale, Hyperliquid is at the very top, and it
Mm,
looks like it's not even close. Not
yeah.
even close.
Mm,
Wow. And
yeah.
so as we start to go down this list here, let's just take a look at this. So that's the nominal APY. I sorted by nominal APY. Let's sort by real yield. Oh, it won't let me. Right here, real yield. Okay, so Hype at the very top, and then
Are you able
Uniswap.
to zoom in just a little bit?
Yeah, let me see if I can zoom in a little bit more here so we can see this. I'm going to zoom in one more time.
That's
That's
perfect.
that's better. Okay, so check this out. Real yield, Hype, plus 57%. Amazing,
Holy
amazing.
shit.
I know, right? And then actually Uniswap says Uniswap is number two,
Mhm.
plus 7.8%. Okay. So Uniswap just enabled that fee switch. So they're doing buybacks with a lot of the revenue that the protocol generates now. That's a good
It,
sign.
and that's very new, like you just said. They just started those buybacks and whatnot. So
Yeah, and so if we actually let me take a look here at the chart of Uni just real quick, and I always like to zoom out. So this is a daily chart. I'm going to
Mhm.
go ahead and remove some of these drawn objects here just so that this is a little bit cleaner. Let me remove that arrow. I'm going to remove that trend line also. So here's Uni. Now, this is actually a pretty ugly pattern. And so here's the thing, even though, according to my research, Uniswap with the Uni token has a real yield of plus 7.8%, that is not enough to support the token price. So even though Uni is using protocol revenues to buy back tokens, that real yield which is generated is
Mm.
not enough to support the token price. At the end of the day, Uni is still a high volatility digital asset. So that means that it's going to be driven by whatever Bitcoin does. And since I think we're in a Bitcoin bear market, that should mean Uni moves lower.
Mm.
So let's bring it on over here to this tab again. So Uni plus 7.8%. Now here's Aster.
I I'm
Yeah,
gonna caveat Aster.
yeah.
Even if this is saying it's good, I see serious issues, and we've talked about this before with the very small amount of wallets that hold like 95% of the token.
Yeah, man. I mean, I wouldn't touch this one. No way. So here's
I
Aster.
wouldn't buy this with your satoshis.
I know, right? No way. There's no way, man. I mean, I just don't trust the team, number
Mhm.
one, and so that kills it for me.
Yeah.
End of story. Like I don't trust Binance. I don't trust their team. I think they're a bad actor in the space. And this Aster token looks like a meme coin. This looks like a meme coin that launched and it does nothing but go down.
Mhm.
So yeah, I wouldn't touch this one. But it says that it exhibits a plus 6% real yield. So
And we could be wrong. I mean, you do your own research. We're just sharing our research. This isn't financial advice. We're not financial advisors. We're just going through and just kind of doing what it is that we do when we're looking for good projects. But sorry, I just
Now,
wanted to
yeah, no, for sure. So here's the next one, Mike. Check it out.
comment.
Tron.
Love
So
Tron.
I
It's
love Tron
like
too.
you've been pointing out, it's outperforming Bitcoin.
It really has outperformed Bitcoin, especially since the start of this last bear market, the bear market that we're in right now.
Mhm.
So here's Tron, TRX. Now, the interesting thing about Tron is that, and let me go ahead and share this tab. Here's Tron. So TRX, Tron. Tron, over the course of this past cycle, has moved to the upside by 7x. The thing about Tron, though, is that it hasn't given it back. Every other token, even if there was a pump at some point over the course of this past cycle, they all ended up giving back those pumps, giving back those moves to the upside. Tron has not,
Mm.
which makes it one of the very best digital assets as of right now. Now, here's the thing that I really like about Tron. If we price it in BTC terms,
Hmm.
so TRX BTC, and we take a look at this,
Look at
look
that.
at that. So this is what outperformance looks like. So you see, notice basically since June of 2024,
Hmm.
Tron put in a low in Bitcoin terms, and then here's a higher low, and a higher low, and a
Hmm.
higher low, higher low, higher low.
For a
And
long
now,
time, it was right
yeah,
in that 200 moving average.
yeah, riding the 200-day moving average all the way up. And so if we just throw down some trend line support there and take a look, there's that trend line. This is horizontal resistance. And so that level of resistance on that, basically like a 1-day pump out of Tron, a couple of, that was like 24 months ago or so, like 18 months ago in November of 2024, that big 1-day move to the upside. This is in Bitcoin terms. So
Yes.
Tron is now getting back up to that level in Bitcoin terms. If we get a breakout here, then Tron is starting to look like one of the best performing digital assets out there.
Hmm.
So pretty interesting. Now, if we bring it back on over here to the research, this one is surprising to me. Polkadot. So it's saying that its real yield is positive at plus 5%. But if we take a look at dot USDT, the Polkadot token,
I'm not a
um,
fan of Polkadot. I held
yeah,
some a while back, like a couple years ago, and I'm just that chart is ugly.
this is really, really ugly,
Yeah.
man. I mean, yeah, I would run in the opposite direction. So if you had purchased DOT at the all-time highs back in November of 2021 at 54, let's call it $55, then you'd be down a cool 97.68%.
Hmm.
So that is what outperformance does not look like. That's
Well,
not good.
I really haven't heard a whole lot of activity out of the project. I mean, it's not something I keep a close eye on, but say something in the chat if you hold dot and you think that some bullish news, because I haven't seen or heard anything.
Yeah, man. So real yield is not enough to drive a token's price. So I would hard pass on DOT.
Yeah.
Um, Now, how about Tau? Let's take a look at Tau, BitTensor Tau. And let me just go ahead and bring up the asset price here, the asset price chart over
And
on
Tau is a
TradingView.
great project, and doing a lot of stuff with AI, if I'm not mistaken.
Yeah, this is an interesting protocol, no doubt about it. Um, Amazing move to the upside from those lows at the beginning of February. And if we just take a look at this here, here's the problem for Tau. What I see here is just another lower high. So we've got a high back in December of 2024. That was, one of the first AI pumps. And then that's a lower high.
Hmm.
And this is a lower high.
Hmm.
So just because people are bidding up Tau right now does not mean that we're going to suddenly be putting in, fresh all-time highs for Tau. Yeah,
Just out,
I don't.
just out of curiosity, how does it look relative to Bitcoin in Bitcoin
So
terms?
yeah, it looks like let's go ahead and take a look at Tau BTC. Now,
Mhm.
Tau in Bitcoin terms, getting very, very close to breaking out. This is a little bit of a breakout, but back down below that level of support. So this could continue to the upside, but I kind of doubt it. I
Okay.
kind of doubt it, just because at the end of the day, this is still a high volatility altcoin. Um, so could this have real utility? I think so. I think it actually does, but it's still a high volatility alt. So I think it's more likely that this one actually, just mean reverts back down to its 200-day moving average in Bitcoin terms over the next couple of months. we'll see how this one plays out. Mike, I've gotta just hop off for just give me two
All right.
minutes. Man. I gotta hop off for 2 minutes. One
Yeah, no
second.
worries.
Sorry about that.
Yeah, no worries. All right. Excuse me. So while he's gone, let's pop over here. So the reason that we're going through these projects like this is it's important that people understand how these, let me start here. So in past bull cycles, in past, the market in the past, pretty much price has been driven by pure speculation. It's whatever social media post, goes viral. If Elon Musk posted a picture of a Shiba Inu, then Dogecoin would take off. I mean, it really was just pure hype. And you saw stuff like the metaverse, where it just a Snoop Dogg would buy some digital property, and people were paying millions of dollars for properties that to be his next door neighbor in the metaverse. You saw cartoon monkeys, NFTs, which those NFTs are just basically a picture, because some of them had utility, because you could earn by holding them from the project. But again, it's totally dependent on that project being successful. And if there isn't a way that they are generating revenue, or fees, or something, and then have something like that is sharing that with you for holding that NFT, then it really is pointless. It makes no sense to buy that token. So the reason that we're really drilling in on this topic is there is a lot of projects out there, and it's one that I always point out, and I'm sure we'll get to it on David's presentation. But XRP, there is a very, very large disconnect with a lot of the people that invest in XRP, because they saw a social media post. I'm one of them. Years and years ago, I bought XRP at the 30 cent, like in the 30 cent range, all through the last bear market, and because of the narrative, the ISO 20022, and all that, cross border remittances, and that narrative. However, one thing that I did not understand at the time, it's just I hadn't learned this aspect yet, is, and it should have, and it kind of a light bulb went off when Ripple won that lawsuit against the SEC, and XRP was deemed not a security. And so that got me thinking. I'm like, okay, well, what does that mean? What does that actually mean? Because it was hugely celebrated in the community. And so I wanted to know, what does this actually mean from a legal standpoint? And so I started doing my due diligence. I started doing my research. And I found out that that's not necessarily a good thing, because if some of these tokens were a security, then potentially it's would be treated like a stock, to where you would share in the success of the company. Where like Ripple in XRP's case, if with all of the moves that they're making, very bullish on Ripple, they're buying banks that have licenses to operate in Australia, and all these different countries, and they're building out a network of banks basically. They're becoming a global bank, is what it looks like they're trying to do. But that doesn't necessarily mean that by holding XRP you're going to share in that success. So that is why we feel it's so important that we keep emphasizing this. And it's not just XRP. There's a lot of projects out there that people just think it has a high market cap. It's successful. They're getting all these partnerships. So I need to buy the tokens so that I can share in that success. There's a disconnect on a lot of these tokens from the projects, to where there's nothing that guarantees. The only thing that's going to drive the price of those tokens, if there isn't something in the tokenomics or mechanics to share that revenue or profits with you, the only thing moving that price is if other people come in and buy it to drive the price up. That's it. Once people realize that that is the only thing driving the price, it's a game of musical chairs. It's whoever gets out first is the ones that are going to profit. And if you're not paying attention, you're going to be exit liquidity. for the people that bought in early. So David's back. I'm going to turn it back over to him.
Yeah, so most of these tokens are not legitimate revenue generating businesses.
Yeah.
Most of them are not. There are very few that are
Regardless of
actually.
market cap, I'll add.
Exactly, man. Exactly. And, you can see some really big market cap tokens that don't actually generate much, if any, revenue at all. So it makes it really difficult to understand the value of holding the token. And I think most of the time, there is no reason to hold the token outside of that you think that you can sell it to someone else tomorrow for 10 times more.
A really good example. I see it at the bottom there. Starts with a C.
Oh, yeah, Ada, Cardano. Oh man. So this one, let's take a look at this Cardano. It says it's got a positive real yield of a massive, whopping 1.5%. So that's at least it's a positive yield. I mean, look, man, I don't understand what the point of Cardano is, unless you're short. Like if you want to be short Cardano, then that's one thing. I'd be happy to be short. I have no position in ADA in Cardano. But just taking a look at this one, why don't we zoom out, Mike? Let's just zoom out here a little ways. This is all of the activity, all of the trading activity that we've got, the price action for Cardano. Now, it made it all the way up to $3 at the peak last cycle, which just tells you how crazy the speculative fervor was last cycle.
But that's all it was. It's pure speculation and people FOMOing in.
Yeah, and look at what happened to the people who FOMO'd in on the way up. They got wrecked, absolutely wrecked.
If they
And
didn't
so,
sell. Yeah.
yeah, and here's something to think about. Most of these alts, I expect them to break down at least to their bear market lows from last bear.
Mhm.
But Cardano is one of the underperformers here. So here are its lows from last bear. Down here, basically where we're trading now. So Bitcoin has not broken down yet below its 200-week moving average. So that tells me that, for a handful of projects, ADA is one, AVAX is another. I kind of expect these projects that are already at their bear market lows from last bear to actually, yeah, dude, to go like, down to their lows from the previous bear. So for Cardano, that could mean 2 cents. Like this thing could really, really dump. If we hop on over here to Coin Market Cap real quick, I just want to take a look and see what is the market cap for ADA. Okay. So this is kind of crazy. Let's see. Is it in the top? Where is ADA?
It was in the top 10 for a while.
Cardano, there it is. It's number 12. It's number 12.
Yeah.
Crazy to me.
Well, and I challenge anybody that's watching, throw it in the chat. Other than MinSwap, which it sounds like a grinder, freaking app. There's almost no TVL on it, almost no volume. It's a DeFi protocol. But other than that, what is Cardano doing? The company itself, is it generating any revenue, any profits? Are they building anything? Are they providing a service of some kind? I haven't heard anything.
Yeah, man, I have no idea what this actually does anymore. If we take a look over here at DeFi Llama.
Well, and more appropriately for our topic, other than staking it for minimal yield, what, even if it was doing great things, what in the tokenomics would share that revenue or those fees that it was generating or whatever with the token holders?
I don't think there's much of a mechanism for that at all. Although, my research tells me that there's a positive real yield here for ADA, but that's not enough though to support the token price, because if there's only 135 million TVL in DeFi on Cardano, then how in the world do you explain this market cap of $8.9 billion. Where exactly is
Speculation.
this? Yeah, I mean, I think with Cardano, the majority of this market cap is staked ADA. I'm
Yeah.
pretty sure that it's almost all staked ADA.
Hmm.
And like that doesn't exactly generate real economic yield.
No.
That's just like a Fugazi.
Yeah.
So if we take a look at ADA, these are the protocols in DeFi on Cardano. You've got MinSwap, a really crappy DEX with a massive $35 million in TVL. That's a joke. Like, this is what a protocol looks like when it's dying.
Yeah.
This is what it looks like when it's dying. So, a 35 million TVL for the biggest DEX, and then the lending
Almost
protocol.
top 10 chain.
Right, right. How crazy is that? This is
Aerodrome by itself is bigger than probably the whole DeFi market cap of Cardano.
much bigger, much, much bigger. So if we take a look, total DeFi TVL on Cardano, $135 million. If we just take a look at Aerodrome, Aerodrome is just one DEX on the base chain. This is the largest, I think one of the leading DEXs next to Uniswap on the base chain. And Aerodrome has 321 million TVL.
Mhm.
So, this is just
And
one
that's just
protocol.
one protocol.
Right.
That doesn't include Morpho. It doesn't include Moonwell. It doesn't include Avantis or anything else on the base chain.
Right, exactly. And so, if we bring it back over here to the research, plus 1.5% real yield with no DeFi dApps at all, with no real developer base, and yet it's still number 12. What does that tell you about the other projects, the other protocols, down past number 12? Like if ADA has a $9 billion market cap sitting at number 12, with no developer activity, with no DeFi TVL, with no real protocols that you can use in DeFi on Cardano, then what's the point again of holding this thing outside of just pure speculation, gambling that this thing's going to go back up to these all-time highs? I think that is not likely. My expectation for Cardano is that it moves down to test its bear market lows from 2 bear markets ago. So last bear market, we're already trading there. The previous bear market, maybe 5 cents or something like that. So this one still has much more room to go on the downside.
If Bitcoin breaks lower.
Right. If Bitcoin breaks lower, which it looks as though Bitcoin is likely to do, because, Mike, for whatever reason, there's a Bitcoin cycle. And that cycle, has a certain number of days from each low to the successive high back down to the next low. There has
And
been,
you pointed
yeah,
out that a very reliable source that posted back in, I think it was like 2020 or 2019, basically predicted the tops and the bottoms of each of the bear and bull markets since then.
yeah, so I've actually got that up. Let me see if I can share. Let me see if I can share that, because then we can talk through that together. Um,
Well, and I want to be fair. I don't want people to feel like that we're just picking on projects that we're not invested in. Eventually, I want to pull up my largest holding, Aerodrome. I want to be fair about this and see what David's AI kind of what he put together. See what it says about Aerodrome.
yeah, we can definitely take a look at Aerodrome. I'd love to do that. It would be great, Mike.
No, but
Yeah.
again, I want to be a channel of integrity. I mean, just because I'm bullish on it, it's my largest holding. I want to be transparent. I don't want to feel like that we're just picking out the projects that we're not invested in and spreading FUD. I want to make
No, 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 no. I mean, I'm putting to you. I'm an equal opportunity FUD spreader.
Oh, absolutely.
You
No,
know?
like I said, we're not an echo chamber here. We're going to point out the good and the bad about every project, if we're invested in it or not. Any interviews we do, I'm going to point this out. Any interviews we do, like the one yesterday with Canton Network, with Shaw, that's his second time on. They do not pay to do interviews. They refuse to pay to do interviews or anything like that. We have never been paid to talk about a project, and we never will.
Mm-mm.
That's not how we operate here. We're going to point out the good and the bad. David and Jeff did a really good job interviewing OpNet,
Yeah, that
and
was a lot of fun.
brought up that there was some FUD in past projects they had been involved in, and he was great. Chad was great about addressing those, and took about 15 minutes and addressed those. But David and Jeff asked those that difficult question. We let him know ahead of time that we were going to be asking those questions, and he still showed up. So hats off to him that he was ready to answer those difficult questions. We're not going to be like fluff here. This is going to be real, and this is going to be raw. And you might not like what you hear, but it's going to be the truth, and it's going to be backed by facts and data. So sorry, David.
Well, yeah, so Mike, but you know what though? Like, not only are we're truth seeking, we're truth seeking. Like, I want to be proven wrong. Like,
Yeah.
I'll put out a thesis, and dude, anyone who has the ability to debate me on that thesis, like, bro, please prove me wrong. Like,
With
that's what,
facts,
yeah.
logic, and data, not your opinion, not your emotions, not your feelings, though.
Yeah, seriously, you got to come with the facts.
Come correct.
Otherwise,
You better come correct,
you better come correct, or you're going to get this hand, man. Like, come on now.
right?
So check this out though. So this is the Bitcoin cycle. And for whatever reason, Bitcoin has a cycle. You could say it's because of the halving. You could say it's because of the business cycle. You could say it's because of the, M2 money supply. You could say it's because of ISM. Whatever you want to say, it doesn't matter. All that matters is that it's real. So this cycle from 2015 to present has repeated with the same number of days from each low to each high, and then back to the low, back to the high. So this was used to predict the all-time high, the day of the all-time high, this past bull. So, the day of the all-time high was predicted using Bitcoin's cycle before the high. So notice the date here, December 12th, 2023, right?
Mhm.
So well before October 6th, 2025. So this guy who posted this, man, he nailed it. And October 6th was the all-time high. Now, that tells us that the low, this bear market for Bitcoin, should come in by October 5th of 2026, because 364 days from the all-time high to the low would bring us to October 5th. So that tells me that by the beginning of the fall of this year, Bitcoin should have put in a low, and we should be buying Bitcoin. That's when we should really be buying Bitcoin.
I'm building dry powder. Ever since you told me this, it's and you not predicted, but using the charts and using data, saying that Bitcoin could go down into the the 50s and possibly the 30s. I've just started building up the yield that I'm earning, and dry powder, and just waiting for lower prices, like I said, because I want to get exposure to Tron. I want to get exposure to hype. I want to buy more Bitcoin. So I'm just building up dry powder right now.
Yeah, man, I'm just sitting on cash and waiting for an opportunity to buy Bitcoin below 49K. That is my goal here. And so, Mike, if we take a look at just BTC just real quick, right? So here's BTC. Now, let's start by zooming out to a weekly. This is the chart that we need to be looking at. I'm going to go ahead and remove some of these drawn objects here. Now, this pattern that we see repeating twice during the bear, this is referred to as a bear flag. Let me just go ahead and draw this in real quick. So here's the all-time high. Here's the first flag. See that? So there's the pole, and the flag must be upsloping. So this is what a bear flag pattern looks like, painting the upsloping flag. This is what a bull flag looks like, painting the downsloping flag. So importantly, a bear flag must be upsloping, a bull flag must be downsloping, okay? Inside bars, that's what we're looking for. Here's the first flag. Here's the second flag. And importantly, look at what is happening just now today. If we zoom in on BTC, we're getting a breakdown below support, a breakdown. So this bear flag is starting to confirm. And what does that tell us?
Well, and for
Well,
the past week or two, you've been pointing this out. That bear flag was forming, and that if it did break down, that we would potentially be going down into the 50 range.
yeah, man, I've been pointing this out for a while now. And, I've been short. I've been putting my money where my mouth is, and I'm making some money. So,
Yeah.
things are good. Um, but what I'm looking at here is okay, we're getting a breakdown. This flag is starting to confirm the next level of support is going to come in at 62K and then 60K. But the fact that we've got this bear flag in a Bitcoin bear as crude oil is really shooting higher, inflation expectations are shooting higher, yields are pushing higher, and you know what? The S&P, the Nasdaq, the Russell, the Dow are all trading lower, below their 200-day moving averages at the same time that we saw the breakdown last year. So we saw the breakdown in stocks occur last March into the beginning of April. We're seeing something similar this year. So this is during a Bitcoin bear market in the midterm year. We've got this bear flag. It's starting to break down. The real level of support, in my opinion, is that 200-week moving average, but I expect it to break. So I think the better level of support here is 49K. And if we get a move down into this green buy zone, that's where I'm going to start to really aggressively buy BTC, spot BTC, no leverage, just spot. So that's what I'm thinking about here is waiting for an opportunity to pick up the highest quality digital asset at a massive discount to its all-time highs.
Yeah.
So if we take a look at some of these other alts though, Mike, just going through some of this stuff, we've got Solana has a positive real yield, barely. Toncoin, positive real yield, barely. We take a look at some of these others. There are a lot of tokens that have a positive real yield, but barely. It's just not enough. Like you need, basically like hype levels of real yield in order for the token to actually push to the upside. So why don't we take a look at hype, Mike? Because this has been one of the best performers so far during the bear. This has actually been a pretty solid performer here. So if we take a look at hype, now the thing about hype for me is the success of this protocol is tied, this token is tied to the protocol success. So the success of this token is tied to the protocol success. And as of right now, Hyperliquid, the protocol, is one of, if not the highest performing, protocols out there in terms of revenues that are generated. So if we take a look over here on DeFi Llama at Hyperliquid, $4.8 billion in TVL on just this one protocol. Just amazing, amazing.
Yeah.
And, if we take a look at gross protocol revenue here, so these earnings, you see how much is distributed to token holders? All of it. All of it. You see that? Yeah. Token holder net income this past quarter, $185 million. Previous quarter, $255 million. Quarter before that, $316 million. So this protocol makes money.
And 100% of it goes back to token holders.
Right. How many protocols can you say that for?
Aerodrome.
Well, okay. Let's talk Aero. Let's talk Aero. That'll be a good conversation to have, I think. So Aerodrome. Let's bring up Aerodrome, and then let's take a look down at their income statement. Yeah. So it looks to me like in Q1 of this year, things have started to turn positive on an earnings front for Aerodrome. So Mike, what can you tell us about this? Because I got to admit, I haven't done a whole lot of deep research onto the Aerodrome protocol in terms of like how much money they actually make. But you can see here that there seems to be quite a bit of revenue being returned to Aero holders. What can you tell us about this?
So I mean, Aerodrome in a nutshell is it's for the most part only on base network. They're adding Ethereum. It's going multi-chain. They're combining with Velodrome, and so they're going to have it's not just going to be base network anymore. So that's a positive. Um, a big thing about Aerodrome is that it's even though it's only been on base, in a lot of metrics, it's outperforming protocols like Uniswap as far as certain pools, certain assets, things like that, as far as volumes and and the fees generated, things of that nature. And from the get go, they've always shared their revenue, so it's not a DAO or anything like that. It is the model is that VE33, where you can lock your Arrow tokens into VE Arrow NFTs, and you can do it for a week, from a week all the way to 4 years, and you can earn yield, off of it. Around right now, it's around 20% APR. So, it's not going to make you rich overnight, but it compounds weekly, which is, very, if you don't understand, compounding yield, it's a very powerful tool. But they are about to launch a new platform. Like I said, they're combining with Velodrome and they're going multi-chain. They have a bunch of new offerings that they're going to be, offering as far as different investment vehicles, things of that nature. So, me personally, I'm very bullish on it. And the cool thing about it is that there isn't really like a company necessarily behind it, and 100% of the fees generated go back to those VE Arrow, lock holders. Anything above and beyond that gets max locked, into the protocol, in the form of those locks. So it's not like that those tokens go out into circulation. So that helps quite a bit at not diluting the token, by just injecting more and more and more, tokens into circulation. So that's in a nutshell, kind of, the overview of Aerodrome.
Yeah, so what I would do here, and we can run through this live right now, actually, Mike, if
Please,
you want to. Um,
absolutely.
so check it out. I would start number one just by taking a look at a chart of price over time. And I like to caveat this by saying this is a VE33 reward token.
Mhm.
So that incentive mechanism, that scheme, I am not bullish on
Mhm.
that scheme. All of the partnerships, all of the new chains, all of the whatever.
Yeah.
Uh, for me, I think that that is much less important than price. And so what I see here is here's that all-time high,
Mhm.
here's a lower high, here's
Mhm.
a lower high, a
Mhm.
lower high, another lower high, and
Mhm.
now here's some support down below. So this is an important level of support coming in at, let's call it 27 cents.
Mhm.
Now, maybe I just want to caveat this by saying that I am short Arrow.
Mhm.
So I just want everyone to know that I'm actually short this. And the reason why I'm short this is I take a look at this pattern and I see a bear flag, upsloping flag. So
Well,
this,
and to be fair, he was pointing this out on Bitcoin, and it's somewhat coming to fruition. So sorry, keep going.
yeah, yeah, yeah. So I trade the chart. When I want to express a directional opinion, I like to
Mhm.
trade the chart. And what I see here is a flag. I see a triple top, 1, 2, 3, and
Mhm.
rejection. And so my expectation for this is that it moves to 27 cents and breaks below 27 cents. And you see back here on that first big pump out of Arrow, because that happened so quickly, my expectation out of this is that if we get a breakdown, you see, there was some volume here, but it happened so fast that if we get a breakdown below 27 cents, I think this goes to like 13 cents quickly just because this was such a quick breakout. I would expect the breakdown to be equally as sharp and fast. So that's my expectation for Arrow. But
Mhm.
as far as the protocol economics are concerned, this is how I would perform research on that. I would start over here in Gemini, and I would say, write me a prompt to perform, write me a prompt for Gemini Deep Research to perform deep dive analysis into the protocol protocol and token economics for the Aerodrome DEX and its native token Arrow. Okay, so all I want first is a deep research prompt. And once I get this deep research prompt, then what I'm going to do is I'm going to take this prompt and I'm going to feed it back into Gemini. So now I've got the prompt. I'm going to go ahead and copy this. I'm going to switch this over into deep research mode. I'm going to paste this in and hit go. Okay, so in a couple of seconds here, we're going to have the research plan. Now, once I've got this research plan, then I'm just going to tell it to go ahead and perform that research. Now, once the research is complete, I'm going to take this research document, once this deep dive analysis completes on Aerodrome, I'm going to take this research document and I'm going to throw it on into my code base in Cursor. So that little web app that I created earlier during our call, Mike, this thing, the real yield for leading digital assets, this snapshot, I'm going to throw that research on Aerodrome into the code base that I used to create this single page web app. And then I'm going to have it perform, I'm just going to have it add it to this little single page app here. So in a couple of minutes, we should have some deep dive analysis on the Aerodrome protocol, its economics, and the Aero token, its tokenomics. So that should be pretty interesting for us to take a look at.
Well,
But
and I'll be curious if it's going to use up-to-date information with like the changes that are being made with the new token and the new protocol, or if it's going to pull the older data from the existing one.
yeah, so Gemini Deep Research is pretty good at pulling up-to-date information. You can see what it's looking at here. It says mapping future trajectories and risks. So it says here, I'm preparing to evaluate the strategic implications of that 2026 merger between Aerodrome and Velodrome.
Perfect.
And what this multi-chain expansion means for long-term holders.
Perfect.
So yeah, that'll be interesting here. So it's gone through 52 sites here. It's going to analyze the results. I've got it in fast mode. So it's going to run through this really, really fast.
And again, David is bearish on Aerodrome. I'm bullish. Short term, I agree with David. I think we very potentially could go lower. I'm bullish long term on Aerodrome. So I'm obviously I got a bunch of VE Aero locks that I'm holding max locked and just earning yield because I mean, it's already gone to $2.20 before. It's done nothing. The platform has done nothing but improve. And they're upgrading. They're going multi-chain. They're have other offerings. So that's going to generate more fees. More volume. All of those things. Its relationship with Coinbase, and there's mechanisms in place where me as a token holder, I earn yield. On the success of the protocol. So. Short term, yes, I'm bearish on Aerodrome. Long term, I'm bullish. So this is one of my largest holdings. So again, I just want to point out that we're going to try to poke holes in our favorite projects here as well.
100%. And so I'm taking a look over here at aerodrome.finance, and just make sure, because there are a lot of phishing sites out there, just make sure that you're navigating to the correct URL, aerodrome.finance. Just double, triple check that you've got the correct URL. But a lot of the excitement, I think, around Aero is being able to lock. Now, one thing that I really dislike about Aerodrome is that they don't let you really connect to this thing unless
you can't see anything unless you connect.
Yeah, I don't want to connect. So I guess I'm going to be stuck not seeing anything. That kind of sucks.
I can connect. I don't care.
Yeah. So I think, actually, Mike, you know what? I've got that deep dive analysis complete here. So the next step here is I export that document, that analysis, to just a Google Doc. And once we've got this Google Doc, here it is, Institutional Analysis of Aerodrome Finance, Technical Architecture, VE33 Economics, the Multi-Chain Evolution. Now what I'm going to do is I'm going to go ahead and download this thing. So I'm going to download this as plain text. I'm going to pop it into meme or not, that thing that I built. And
Yes.
then, I want to hop on over here into Cursor. And so let me just, share a different, let me share Cursor so we can take a look at this and you guys can see as I'm building this, what this looks like. Okay, so I'm sharing Cursor. Let me add that to the screen. Okay, so now you see I've got the Aerodrome Finance deep dive. Here's the analysis. This is like a 20-page document in text format. That's what you need. And now what I want to do is I've got, most of my context windows still available. I'm going to pop this into plan mode and I'm going to say, read this context about Aerodrome and then build a plan to create a new section in the single page web app dedicated exclusively to Aerodrome analysis and the Aero token analysis. Okay, and then I'm going to take that Aerodrome Finance deep dive, throw it into the context window, and hit go. And so what this is going to do is it's going to build us a plan for taking that piece of research context and then integrating it into that single page web app that I built earlier in the call. So this is going to be really interesting because I really do want to learn more about Aerodrome and Aero. And so this is how I like to learn about this stuff.
I'm gonna convert you. You're gonna be buying aero locks and
I don't know, man. You want to give me some money? Give me some money. I'll buy some Aero locks.
I'll send you some cheese.
Yeah, give me some stats.
Yeah.
Yeah. So, I mean, this is pretty cool. It's going to put together some subsections, on the thesis, the architecture, the ecosystem, the token model, supply and policy, anti-dilution, some metrics, some velocity, the 2026 outlook, and the risks. So now it looks like we've got that there, redeploy to Firebase hosting. I'm going to click build. This should take just a couple of seconds. Now, I've got this in stupid mode. This is in auto mode right now on Cursor. But, auto mode is great if you don't want to spend any money and still be able to produce some interesting analysis. Now, if I wanted to do genius mode, I would put this into one of the Claude models, probably Opus 4.6, but I just don't want to spend, those tokens. Those tokens are very, very expensive. So keeping it in auto mode allows me to, put together all sorts of research and it stays within my token budget. Okay, let's check this out. So it's drafting up the HTML sections. This is just vanilla HTML that it's writing here. Mike, have you seen that meme? I think it's a meme on X of, like an orangutan and that British guy who goes out, all around the world and creates those documentaries on nature, all those nature documentaries, whatever his name is.
Older British dude.
Yeah. So there's a funny meme where, he shows this orangutan using a saw and using a hammer and nails. You've seen that? Yeah. So that's kind of like I would be the orangutan if I were to be coding, but if I'm not an orangutan, I'm a human, and I like to use Cursor to code. So this is the best way to do this stuff. I mean, you really don't even have to learn how to code anymore. You can easily learn how to use Cursor to create software. And so now that it's drafted the HTML into that index with all the subsections, now it's just putting together the CSS, which is like the styling, and then it's going to update and redeploy to Firebase hosting. And then from there, we're going to be able to take a look at that updated web app. So that'll be pretty darn cool. And then in the remaining 20 minutes here, Mike, we can talk through the Aero token. So, and Aerodrome's protocol economics. So in the meantime, as we're waiting for that, I want to bring it on over here to one other tab. Now, something else that I really like to do when creating learning materials is I like to use Notebook LM. And so I'll hop into my drive here. I'm going to take that aerodrome research. See right there, the aerodrome finance deep dive analysis. I'm
Mhm.
going to take that research, throw it in here, and I want to create a piece of video content. I'm just going to create an explainer in Kawaii mode, and I want to create a slide deck and maybe also an infographic. So this will really help us to, run through all of that analysis once it's complete here. Okay, looks like that is complete. So now we can go ahead and hop back in here to that meme or not app that I created. I'm going to go ahead and hard refresh this thing. There it is. See that? Aerodrome. Awesome. Let's scroll down. So here's the deep dive, Mike. And let me just go ahead and share this with everyone in the chat. Anyone who wants to take a look at this deep dive analysis, this is pretty cool. I'm just going to pop this link in the chat for anyone who wants to take a look. There it is. So let's take a look through this together. Let me go ahead and share the correct screen here, Mike. Let me just bring this one up. So I want to go ahead and stop that share and bring up the correct window here, real yield on arrow. Let's check this out together. This will be interesting.
I'm I'm
Okay,
I'm actually pushing this out on X right now because I think this is going to be really valuable to the community.
so check it out, Mike. We've got this deep dive on aerodrome finance and the Aero token. So Aerodrome is viewed by many as being Base's liquidity layer. It's got this VE33 flywheel, and that's actually what I dislike. Um, and it says here that real yield accrues to VE Aero in the form of fees and bribes versus inflationary Aero, which is paid to LPs. And this is sourced from internal research. So this is not sourced from live protocol APIs. This could be stale data. But Aerodrome Finance is positioned as the foundational DEX on base. We know that. Awesome. Here's the architecture. MetaDex 03. Okay. So this is described as a modular MetaDex stack with multiple AMM types. You've got the V2, that's the full range. You've got stable pools and concentrated liquidity provision over there under one governance and incentive layer. So Slipstream, that's Aerodrome's concentrated liquidity layer. It uses Uniswap v3 style ticks. Okay, great. Oh, whoops. Let me make sure that I bring that back up here. There it is. Awesome. So dynamic fees and routing, maximal extractable value. So under MetaDex 03, embedded MEV auctions are framed as capturing value. Okay, so let's see if that's true. Now they've got a Coinbase integration, of course. We know that. That's a big positive for Aerodrome. They got an Aero launcher, so permissionless launches on the base chain. That's pretty cool. Strategic ties are called out in the document with that Coinbase smart wallet, which lowers the friction for retail to be able to operate natively on a permissionless DEX. So that's pretty cool. Coinbase Ventures, it looks like they've got $20 million locked as VE Aero so they can steer emissions. So that's kind of interesting right there that Coinbase Ventures has an estimated $20 million locked as VE Aero.
Mhm.
Interesting. Okay, so here's Aero, VE Aero, and the weekly cycle. So Arrow is the liquid inflationary utility token.
Mhm.
VE Arrow is vote escrow governance, okay? With voting power scaling with lock size and duration. So if you lock your Arrow for 4 years, it
Mhm.
maximizes your voting power versus shorter term locks.
Mhm.
So each epoch on Arrow is
Wed-
7 days,
Wednesday to Wednesday.
right? And the protocol issues a set amount of arrow emissions. And so you can actually use that Dune Analytics dashboard to project out whether the yield in a specific pool that you might either be voting on or providing liquidity to, whether that yield will go up, go down, or stay the same. So you can use that Dune Analytics dashboard to do that. Um,
Uh,
now,
honestly, the best low maintenance way to do it is just to put your lock in one of the VE Aero Maxi relays. and it's going to give you the best, best return without having to, go and do a bunch of research every week.
Yeah, it's a lot easier that way, no doubt. And so it says the auto max lock can keep VE Arrow at a perpetual 4-year lock, so voting power does not decay. So
And
that's
that's
used.
what those BE Arrow Max relays, Max D relays do.
Yeah, so it says here that that's used by long-term partners. So,
Yeah.
think Coinbase, right? So here are the different stakeholders in that VE33 model.
Mhm.
So the one stakeholder would be a trader. The trader executes swaps. They get low fees and minimal slippage. Now,
Mhm.
Aerodrome is great if you're a trader and you just want to swap asset A for asset B. It's
Absolutely.
pretty darn good for that. Now, if you're a liquidity provider, you're a stakeholder, and your role is to supply capital, and what you earn is arrow emissions. So
And
those
so,
are the
so that's if you're putting liquidity into liquidity pools, either full range, concentrated liquidity, those sorts of things.
exactly. And so those arrow emissions that liquidity providers earn, those are the inflationary arrow emissions. Now, VE arrow voters, they direct the emissions.
Mhm.
So when you're a VE arrow voter and you vote on a pool, what you're doing is you're saying, hey, protocol, direct arrow emissions to this pool. And that can have the effect of driving up the yield that those full range liquidity providers earn.
Well,
Also, the
more, more,
concentrate.
more specifically, it's the liquidity that you have in your locks. You're voting for, to where your liquidity should go.
Right. And so that's going to determine the arrow emissions allocated to each pool,
Absolutely.
which really dictates how much full range LPs earn. And so let's see here. And then another stakeholder in this scheme is external protocols. And what they do is not necessarily all of them, but what many of them choose to do is provide bribes. So part of the bribe process is, what they like to do here is use these bribes to incentivize more liquidity providers to swap into their token and then deposit it as liquidity in a pool. And that has the effect of not really locking up tokens, but making them, it removes selling pressure for a lot of protocols.
Mhm.
So bribing can work really, really well. But if a protocol bribes too much, then that flywheel, although it can work really, really well when a protocol bribes a lot, the moment a protocol stops bribing VE Arrow voters to vote on their pool, you can see that flywheel work in reverse.
Mhm.
So you got to be cautious of external protocols that are bribing too much.
Yes.
Okay, so let's see what we've got here. Supply, emissions, and arrow fed. So it says the initial supply is 500 million arrow tokens, of which 90% or 450 million are vote locked as VE arrow at the launch for long-term alignment. So I'm assuming that this is referring to the arrow fed, Mike. I think so. That's what
Yeah.
this is referring to. Yeah, arrow fed. Okay, got it. So here's the takeoff period, epochs 1 through 14. So this is weeks 1 through 14.
Mhm.
The emissions are ramped up, to 3% per week from an initial 10 million arrow per epoch. Okay, so, this is the initial takeoff phase.
Mhm.
Now it looks like it could be inflationary to me. I'm not quite sure here. Um,
It's potentially. I mean, it was when it first launched. That's what it was doing.
yeah, and then here's the next phase, the cruise phase. This is epochs 14 through 66, so weeks 14 through 66. This says 1% decay per epoch as organic fee revenue grows. Now, this is based on the research. We've got to see if this is actually what things look like in practice, though.
Yes.
And then for the arrow fed from epoch 67 on, when those weekly emissions fall below 9 million arrow, it says VE arrow votes weekly to nudge emissions by plus or minus 0.01% of total supply or hold steady. So, this incentive scheme here, um, I prefer like organic emissions on a protocol like Uniswap
Mhm.
rather than a complex incentive scheme on a VE33 DEX like Aerodrome.
Mhm.
But it says here there's an anti-dilution or rebasing phase.
Yep.
So it says lockers can be diluted by new arrow minted to LPs. So yes, I think they are diluted. And it says Aerodrome uses a weekly rebase to
Mhm.
VE Arrow designed to preserve lockers' share of supply. Okay, but that doesn't necessarily fix the problem of the arrow token itself losing value. If you're rebasing to VE arrow, but the underlying arrow in those VE arrow NFTs is losing value more quickly than the rebase is accruing value, then net net you're down.
Well, and
So
I mean,
yeah,
and that's going to be true of any project, and in short term, versus long term. Because if you're in a VE arrow lock, like it or not, I mean, you're in for at least a week, if not longer. Like I said, most people are max locking, so it's you're not looking at the 15-minute candles and stuff like that. You're looking at the long term potential of the protocol. So
yeah, let's take a look at the 2026 outlook.
yeah,
This is kind of interesting here. So it says the document frames a merger, Aerodrome's merger with Velodrome, into a unified Aero multi-chain stack. That's Dromos Labs. So that's targeted to complete by Q2 of this year. So there's going to be that single governance token. That's Aero. Um, and it looks like we got that meta dex 03
Mhm.
across this Ethereum superchain, I guess is what it's calling it,
Yeah.
and integration with Circle's Arc. That's the
Mhm.
stablecoin bridge. And they're upgrading Slipstream to version 2.
Mhm.
They're going to give you some AI assisted routing.
Mhm.
And it says here they're expecting a 2.8x revenue uplift in their own internal projections. So
Mhm.
this is a roadmap, not a guarantee, right? And
Absolutely.
so, yeah, so here are some of the risks, right? Security and operations. So in November of 2025, Aerodrome.finance, their domain name service, their DNS was hijacked,
Yep.
and $1 million was drained from wallets via Web 2 infrastructure.
They did
So
Aerodrome did pay most of that, if not all of it back though.
that's good. But yeah, that's just one thing to be aware of. And then here's another risk, risk number 2. It says emissions fatigue. So as emissions decay, LPs may need stronger fee or bribe economics. So the arrow fed votes become load bearing. So
Mhm.
arrow fed can direct the emissions of arrow tokens. So emissions fatigue could become a real thing. Let's see what happens. And then they're saying governance stagnation. So reports, that's another risk. So reports around March of 2026 note quiet governance during the merger prep. That's a risk of voter apathy. Okay, that's not a good thing. That's a risk. And then here's another risk, regulatory and listing risk.
Mhm.
So fee sharing to VE Arrow holders may draw securities style scrutiny.
Mhm.
So a central exchange listing friction. So for Arrow, the token. So this is potentially a problem in the United States because Arrow is not one of the Sweet 16 decentralized commodities, right?
Mhm.
So Arrow did not make it in there, which means it is still in the attach phase. So if it's in the attach phase, according to that SEC, CFTC, I don't think it's like law. I think it's like a policy.
Mhm.
But since it's still in that attach phase, there's some regulatory risk here, because what if Arrow and tokens like it are classified as securities? That could potentially be a problem for the Arrow token and for VE Arrow holders themselves. Because if you're a US citizen and you're holding something that suddenly becomes classified as a security, that could potentially be a problem. So that's a risk. And then another risk here is competition. So Uniswap V4, those hooks contracts, and new entrants to the DEX space could fragment liquidity despite Aerodrome's share, which on the base chain of DEX swaps looks to be around 60%.
Yeah,
So
I don't, that last one I don't see as an issue. I mean, Uniswap's been around forever and it's multi-chain, and Aerodrome, even as it sits now without the upgrades and stuff like that, is, beating it up. It's, so that I agree with all the other ones, but that last one, I'm not worried about, Uniswap, coming out of nowhere.
yeah, so Mike, I've got right here, I've got a piece of video content that we can take a look at to wrap things up around Arrow. I'm going to pop this into 1.5x.
Well, real
So,
quick, I want to see if you have it. I want to watch this, but I want to see that where it rates as far as like hyperliquid and stuff like that, as far as uh, just that gauge.
oh yeah, here, let me pop it back on over to that document. Let's see if it added it in here or not. Because I didn't tell it to. So
Oh,
I don't know if it's going to. Let me just see Arrow. No, it didn't add it into the table.
no
Um,
big deal. I wanted to see where it's at. That was what I was curious about, is how it sat relative to these other projects.
yeah, that would be interesting to see. I'll probably end up adding that back in. But in the last 5 minutes that we've got, do you want to take a look at this piece of video
Yeah,
content?
yeah. Let's watch it real quick before we pop over to Don over on
DeFi
DeFi.
High. Okay, so here, tell me if you can hear this.
All right, today we're jumping into Aerodrome Finance. This is a project that didn't just show up
And I've got it on 1.5x speed so that we can wrap this up in the next 4 minutes. Yep.
on Coinbase's base network. It pretty much became its economic engine. We're going to break down the absolutely genius flywheel design that let it capture more than half the market. Let's do this. So, how does one single platform in an ocean of competitors end up capturing over half the market share? We're talking both trading volume and total value locked on an entire network. That's the huge question at the heart of Aerodrome's story. And the answer is really a masterclass in economic engineering. To really get Aerodrome, you can't think of it as just another decentralized exchange, or DEX. It was designed from day one to be the bedrock, the foundational liquidity infrastructure for the whole base ecosystem. It's the plumbing that makes everything else work. Okay, so how does it actually work? Well, under the hood, there's this system called MetaDexo3. The key thing to understand is this idea of a modular liquidity engine. Don't think of it like a single tool. Think of it more like a Swiss Army knife. It can handle all sorts of different trading pools, stablecoins, volatile assets, you name it, all in one place. What that really means is it acts as a master liquidity aggregator, always finding you the absolute best price for any trade. And this right here is a perfect way to picture one of its biggest advantages. See, the old way of doing things, the V2 AMM model, was like trying to water one single plant by flooding an entire field, just wildly inefficient. But Aerodrome's Slipstream module brings in something called concentrated liquidity. This is like using a watering can to put water right where it's needed. You're focusing capital only in the price ranges where the action is, which makes it incredibly efficient and earns way more fees for users. Now, let's get to the real secret sauce, the thing that makes this whole system tick, the economic model. It's called the V33 flywheel, and honestly, this thing is a beast. It's a powerful system designed to make sure every single person using the platform is pulling in the same direction. At its core, it's all about two tokens. First up, you've got Arrow. Think of this as the fuel for the engine. It's the reward you get for providing liquidity. Then you have V-Arrow, and this is the key. You get this by locking up your Arrow, and it gives you voting power and a slice of the protocol's revenue. And here's the kicker. The longer you lock, the more powerful your key gets. So check out how this flywheel spins every single week. First, new Arrow tokens get created. Then, liquidity providers, or LPs, put their assets into the pools to earn those fresh Arrow rewards. Now here's the magic part. The V-Arrow holders, the people with the keys, get to vote on which pools get all the Arrow emissions for the next week. And for doing that, they earn 100% of the trading fees from the pools they voted for, plus any extra incentives, which are called bribes.
So this whole flywheel here, my question to you, Mike, is, on Uniswap, when you provide liquidity, you earn trading fees paid in those underlying assets.
Yes,
But
and
you
you
know,
can do that on Aerodrome as well.
you can. But I'm just kind of curious, what does if the protocol incentivizes liquidity providers to deposit assets into pools, and then it mints Arrow and distributes that to LPs, what does the protocol do with those underlying trading fees in those underlying assets? Does it keep them for itself? What does it do with that? I'd be curious to learn about that.
Yeah.
I don't know.
pulls in even more liquidity to those pools, which means more trading, which means more fees, and the whole cycle starts over again, but bigger and stronger than before. And this is where it all just clicks. Everybody's incentives are perfectly aligned. Traders get what they want, low fees, because the liquidity is so deep. Liquidity providers are happy because they're earning ARO. The V-ARO voters get the protocol's real revenue for steering the ship. And even
So I'm not happy to earn Arrow. I don't want to earn it.
like I said, you can choose what you want to earn. Now I will caveat that with if you choose to earn your yield in those underlying assets, you do pay a 10% basically fee, and those fees go to the VE arrow holders.
Right, right. So I think, Mike, we've run out of time. We've got 1 minute until DeFi dawns, DeFi high. But dude, I've got to do some more work on the Aerodrome protocol. I think that'll be interesting for all of us.
Yeah, no, definitely.
Cool, man.
All right. Well, let me see if it looks like Don's all set up and ready to go. So if Don, if you want to kick it off, then we'll end the node, and hopefully it will live redirect everybody over to you.
Sounds good to me, Mike.
Here, I'm gonna hit go live for him. I don't know if he's ready, but we're going live.
We'll do it live.
Yeah, we'll do it live.
We'll do it live.
All right. Let's